Hi traders, welcome to this week's pre-weekly market review by Trade Genius Group. We're looking at the USDCHF in particular, but we're also going to be exploring a couple of other technicals. Just a quick refresher from last week. US stock markets continue to rally above the 2,000 mark. However, the rallying has been rather sluggish and there's been a notable slowdown there. So you might want to take note of that. There are a lot of talks going on in the market about potential pullbacks now, although to be honest, our group are not so convinced, and we still see the possibility for US stock markets to possibly extend their rally slightly further in the coming months, if not in the short term. Also guys, the Japanese yen continued to weaken last week. Perhaps it's reached the end of this round for now, as the Japanese yen continues to be one of the most oversold currencies on the market, thanks to continued stimulus added by the Bank of Japan. Last but not least guys, the euro has kind of been floating around the low levels. We're awaiting to basically get confirmation of more stimulus backed by the ECB, and we're going to listen out this week for some talks by Mario Draghi. Without further ado though, let's look at some of these technical pairs. Here we were speaking about the yen earlier and the weakening. Here you can see against the dollar. Dollar yen has been weakening obviously. Sorry, that is the pair has been strengthening, but the yen has been weakening to 116 levels, just short of 117 levels. That is crazy. So the recent swing that you can see here on your daily chart started basically just around 105 and took us all the way up now to 116.94. It looks like this has formed a megaphone pattern, guys. So I don't see this pair, or we rather as a group don't see this pair extending itself too further from this point without some sort of pullback. Maximum extent possibly back towards 109 levels. There you can see it now on a zoom out. There's the liftoff which took place on the dollar yen really from July, and then we obviously had a lot of consolidation taking place in September as it moved back from sort of 110 levels down towards 105 levels, and then back up again after more aggressive intervention from the Bank of Japan. So there you can see now previous resistance may form a support line at some point at 110, and that will be interesting to actually keep an eye on there in the coming weeks. Okay, there is the same chart on a weekly level, so you can just get an idea of the drastic extent to this weakening which has been taking place basically since 2012. We've moved on now to the pound dollar. This is quite an interesting pair really. After a very strong early start to the year, the pound has had a very sharp sell-off, and that's perhaps largely connected to the weakness of the euro being its major sort of neighbouring trading partner in the Eurozone area that's using obviously its own currency. You can see here this bearish channel that's been moving down looks like it is coming towards an end. The longer term diagonal lines point towards 153 levels, but they do range up towards 155 levels. We're now at 156.50 levels, and we kind of almost touched 155. So it looks like the strength of this sell-off seems to be coming to an end for the short to medium term, and those of you who have been short on that might want to consider profit taking before the end of the year. If we look at it on a 4-hour chart, guys, you need to keep a very close eye to see if this bottom support line actually remains intact. There is a possibility that the breakout here on the right of your screen is what's called a fakie, where the market breaks down only to move back up inside the range, and that looks like it's quite probable. Also the RSI showing you it's oversold at 30. But guys, without further ado, we've moved on to the major pair this week. It's the dollar CHF. We've finally seen the dollar weakening against this pair now in the short term, and the CHF showing some strength against this. We can see here the support resistances of this channel, and we see the breakout that I'm just circling right there. It broke down below 0.9666 levels just at the end of last week, after many participants were expecting there to be a reversal to the upside. I've circled for you two possible double tops there, also signifying the start to a reversal, and I want to now zoom out and show you again possible longer term sell-offs on this pair, which extend not only towards 95.50, which is actually a 61% Fibonacci retracement level from the previous lows of this swing that we were monitoring over the last few weeks, okay? But also, if this pair is in a more serious consolidation phase towards the end of the year, as people divest in their long dollar positions, we may see this forming a retest right the way down there around about the 94.50 level, which would give us obviously another good 100 pips or so on this trade in the short term. There you see here we've moved to the daily chart, and we are zooming out and showing you here from the 4 hour to the daily we have another situation showing you double top patterns. I'm going to show you the double top peaks. They are peaks of waves, and I'm going to circle those now. And we are seeing here that the previous trend line from the daily chart is showing you a support that is actually around about the 95.60 levels, possibly lower. So if we get a breakout from that line, then obviously we're going right down towards 94.50 levels, and you can feel a lot more confident that this pair will indeed take that double top to new levels. Okay guys, that's pretty much it, but don't forget this week there's a lot of news coming out which will be moving these pairs. The yen pairs will be shifted on Monday's market as we have preliminary GDP figures. Listen out closely when you're watching pound dollar as the ECB president speaks in the Eurozone, and that will definitely have a knock-on effect. And that spirals over to Tuesday where we have UK CPI data. And towards the end of the week, guys, you have FOMC meeting minutes, okay, and UK bank rate votes, and of course on Thursday US unemployment numbers. So a busy week, not the most of busy weeks, but nonetheless a lot of market movers to come ahead as we approach the second half of this month. Have a great week and trade safe.